What if I told you there's a completely legal way to boost your credit score 50 to 100 points, and banks will never explain it clearly? Because the less you know, the more money they make. In America today, your credit score controls your mortgage approval, your car loan interest rate, your credit card limits, even your apartment approval. And that score? It's usually calculated using the FICO scoring model. But here's the shocking part, and most people don't actually understand how that number works. And once you understand it, you can strategically manipulate it legally. Let's break it down. What is a credit score really? Your credit score is not about how rich you are. It's about how predictable you are. Banks don't care if you're wealthy. They care if you're reliable. In the United States, most lenders use scores created by FICO. Vantage score. Your score usually ranges from an 300 850. Here's how it breaks down. 300 579 equals sign poor. 580 669 equals sign fair. 670 739 equals sign good. 740 709 equals sign very good. 800 850 equals sign exceptional. But here's the score isn't random. It's based on 5 weighted factors. The 5 credit score factors. This is where the hack starts. According to FICO, your score is calculated like this. Payment history 35%. Credit utilization 30%. Length of credit history 15%. Credit mix 10%. New credit inquiries 10%. Now listen carefully. Most people focus on paying bills on time. That's good, dude. But that alone won't skyrocket your score. The real hack is in factor hash 2. The credit utilization secret. The main credit utilization equals sign how much of your available credit you're using. Example: if you have $10,000 total credit limit and you're using $5,000, your utilization is 50%. That's bad for your score. Here's what banks don't advertise. Your utilization should stay below 30%. But the real sweet spot? Under 10%. If you keep utilization at 1%, 9%, your score can jump dramatically, even if you don't pay off your debt fully. Let me explain why. The algorithm rewards low usage. It sees you as low risk, responsible, not desperate for credit. And here's the powerful part. Utilization has no memory. If you reduce it this month, your score can increase next month. That's one of the fastest legal credit boosts in America. The statement date trick. Advanced hack. Most Americans make a big mistake. They pay their credit card bill after the statement closes. But your balance is reported to credit bureaus on the statement closing date, not the due date. The major bureaus are Equifax, Experian, TransUnion. Here's the hack. Pay your balance before the statement closing date, not just before the due date. That way, the reported balance stays low. Lower reported balance equals sign lower utilization equals sign higher score. Simple, but rarely explained clearly. The authorized user strategy. Another powerful but underused strategy. Become an authorized user on someone else's old credit card. If they have a long history, perfect payment record, low utilization, their account history can reflect on your report. Instant boost. This strategy is legal, but it must be done carefully. Because if they miss payments, it hurts you too. Hard inquiry myth. Fear versus reality. Many Americans panic about hard inquiries. Yes, they affect your score, but only about 5-10 points temporarily, and they fall off after 2 years. So the real damage is usually small. The bigger problem is high utilization and missed payments. Why banks don't emphasize this? Think about it. If consumers kept utilization under 10%, avoided carrying high balances, optimized reporting dates, banks would earn less interest. Credit card interest in the US averages over 20%. That's massive profit. Understanding the system makes you less profitable to them. Real example scenario. Let's say John has $5,000 limit, $4,000 balance, score 640. He pays down to $400 before statement closes. Utilization drops from 80% to 8%. Within 30-45 days, score could jump to 700 plus. No magic, just math.